Well, thank you for joining us. My name is Nicole Cavender from Aero Benefits Consulting, and today we are hosting a conversation and discussion around the post-COVID landscape with Ann Alsina from Covington Alsina in Annapolis. Very excited to have Ann, and I want to go ahead and let Ann take over and discuss what she thinks is important for our clients and potential new clients to know. Welcome, Ann.
Hi, Nicole, thanks for having me. Today I want to talk about three different things. I want to give you kind of an overview of the economy and the markets, and I want to talk to you based on whether things are going strong for you or whether you're really struggling, because I think we've kind of fallen into one of two camps there with that. So starting with the economy overall, if you look at the stock market, it seems kind of strange because this market is still doing relatively well. We're down, but nothing like we were during the Great Recession in 2008, 2009. We're still at a positive number for 2 years. It seems like worse because we were at record highs in February, but overall, the stock market, prices in the market are still good. This is largely due to Fed intervention, meaning the Federal Reserve Bank has injected tremendous amounts of liquidity into publicly traded companies. So that's helped the economy and helped stock prices. If we have businesses reopen soon, within the next month, we expect a quick recovery overall. We hope that you would not sell out of any of investments because of the current panic, right? If we have to tap into resources because you're struggling, that's a different story. But overall, please don't panic sell, right? There's over 100 years of stock market history that's going to tell us the market will still recover. And if you think about it in terms of, oh my gosh, I've lost all this money. The simple fact is you still own the assets. It's just what someone is willing to pay you is less than it was before the crisis. So if you owned Apple stock before all of this started, you still own Apple stock. You still own the same number of shares of stock. It's just that someone's not willing to pay you as much for them. Okay? And as long as Apple's still here in another year or 2 years, chances are you're going to be able to get what you were before the crisis for that stock. So overall, the economy, we expect it to rebound quickly as long as we can reopen businesses soon. If you and your business are doing okay, meaning cash flow is still coming in, things are still going strong, then please keep investing in your retirement accounts. I know right now that buying low, that's what you're doing. Buying low feels like eating cold, mushy green beans. It doesn't taste very good, but it's really healthy for you. It's a good thing to do to keep buying, even though it doesn't feel exciting. And I know sometimes when the market keeps going down, you buy, so you've put money in and you're saying, how I put money in and I still have less than when I started. How is that possible? You're buying more shares. And so it's not the dollar amount, it's the number of shares that you have. And that number is still increasing. So keep investing, even if it feels like it's not doing any good. As a business owner, as an individual, it's really important right now to build cash reserves. So extra money that you have that you can build to put in cash, whether that's your business or your personal, is important. Cash is king right now. We've talked on several of our other things that right now we're in what's called a liquidity crisis, right? Meaning it's a matter of cash flow. This is opposed to a solvency crisis where we're worried about companies completely going under because they're not well run and they have problems with their balance sheet. This is a cash flow problem. So as much as you can build cash reserves, keep doing that. Also, if you have the availability to work with your banker to open a line of credit, if you don't already have one, I would strongly encourage any business owner to do that. It's usually easier to get when times are good, but right now it's still good to work with a banker, establish a strong banking relationship, and do that. Now, if you're not one of those fortunate ones, if you're struggling, do what you have to do to keep afloat, okay? That's what we just need to get through this. So the first thing, call your mortgage broker, your mortgage company, your servicing company, and ask about mortgage forbearance, okay? It's important when you do that that you check what the repayment options are. Sometimes there'll be a balloon payment, which is not going to be good. That's going to put us back in the same position. Sometimes they'll give you 6 months or a year to repay the mortgage payments that you've missed. Sometimes they merely add those months on to the end of the mortgage. So ask about what your options are for repayment before you agree to the mortgage forbearance. Same thing with car payments, utility bills, credit card payments. Anything that you can push off right now, do it. Make sure you're communicating though. It's not a matter of just not paying, it's a matter of reaching out, saying you're affected by everything going on with the shutdowns and you need help. okay? A lot of car payment companies are allowing you to push loans out, meaning they'll just forbearance. It still keeps accruing interest, but the months that you haven't paid are just added to the end of the loan. Most utility companies are allowing you to make late payments. They're not doing shutoffs. They're not charging interest or penalties. And some credit card companies are also allowing you to defer payments without a hit to your credit score. Okay? If you're a business owner, you want to take advantage of the Paycheck Protection Program, the EIDL, the Economic Injury Disaster Loans, anything and everything you can do. There's a lot of companies that have set up grant programs and other things. Take advantage of everything you can right now to get cash in the door. If you need to, it's always a last resort, but if you need to, the CARES Act did make some changes to the way we take loans from our 401ks. And a loan is better than a withdrawal because the loan can be paid back, right? When things get better, when business improves, we're going to start paying that back. So a 401k loan is normally you can take up to $50,000 or half of your account, whichever is greater. The CARES Act increased that to $100,000 or 100% of your loan value, whichever is lower. So if you have a $200,000 401k, you can borrow $100,000. If you've got a $75,000 401k, you can borrow $75,000. That'll be paid back over 5 years. And the interest payments, the interest that's paid on it goes back into your account. Okay? You can also tap your IRAs right now. Normally, if you're under 59 and a half, there's a 10% penalty if you tap into your IRA. Right now, because of the coronavirus, the CARES Act has waived that 10% penalty. It also allows you to spread the taxes over 10 years that would be due on that withdrawal, or it allows you to pay that money back over 10 years. So if you're really struggling, do what you can to push things into the future, take advantage of any government programs that you can, and then tap into your retirement savings as a last resort if you need to, again, to get through this liquidity crisis. So I know this was very general. It's hard to get specific in a meeting like this. If you have any questions, concerns, please reach out to us. We're more than happy to help you. Our email is info@covingtonalsina.com. You can go to our website. We've got our blog posts up with a lot of great information on all of this, or you can call our office, 410-457-7165. I'm more than happy to talk with anybody who wants to give me a call right now and just give you some ideas, bounce some things around, and see what we can do to give you good advice.
Thank you so much, Ann. That was really helpful. I actually do have a couple of real quick questions for you. With the repayments and being mindful of how that structure is going to be, if it's going to be that balloon payment or adding it to the back of the loan, is there anything that that folks can say that can encourage that lender to add it to the back of the loan over top of other options?
Nope, it's just what the lender allows.
So it's just a lender discretion.
Yeah, I think if it's a federal loan, like an FHA, I think they have to allow you to add it to the end of the loan. But if it's not a federal loan, they don't even have to offer forbearance.
Okay, perfect. So, and then the other arena that I'm seeing some folks kind of struggle is, you know, you've got landlords that aren't necessarily mortgage lenders that are going to work with you on that, and I know that they themselves as landlords are struggling to get the payments from some of those folks, and those folks are trying very hard to figure out how they're going to make those payments with no revenue, and even when coming back, the thought that the revenue is going to be much less than it was pre-COVID. So what things do you recommend in that relationship, if you will, between landlord and renter? Any suggestions as to how to work this? Obviously, I'm assuming the same would go for the landlord to contact any mortgage lender he might be working with or they might be working with.
So commercial mortgage, they should definitely reach out to their lenders. Again, most lenders understand what's going on and are willing to work with people, and some of them are willing to put it into forbearance. I know my commercial banker is doing that with mortgages. If you have a 7A loan, a 7A Small Business Administration SBA commercial mortgage, the SBA is actually making those payments for 6 months. That was part of the CARES Act, and I don't think a lot of business owners are aware of that. If you have a 7A business loan, which sometimes are mortgages, sometimes they're just lines of credit or anything else, the SBA is making those payments for 6 months. You don't even apply. The SBA just does it automatically.
Interesting. I did not know that.
But I will tell you that like my bank did not send anything out on it at all. It was a different bank that let me know about the program.
Interesting. I will take a peek at that myself. Another good point. So we were in the middle of hiring at the time this all happened because we had a growth pattern planned. So I have now new hires that have come on that were not necessarily in my initial PPP estimates because I used obviously payroll from past periods. So now when I go to file at the end of this for forgiveness, what kind of worry do you think I should have as it surrounds the additional staff that I had to hire? Because our office actually saw an increase in work, no increase in revenue, but an increase in work, trying to navigate all these changes. What
all
do
they're
you
going to look at, they want to make sure that your payroll numbers, your head count stayed the same, right? That you didn't lay anyone off, because that's going to affect whether it's forgiven. But if you increased it, that doesn't matter. Now you spent money on payroll, which is the whole point of it, right? You have to think about the spirit of the law. The spirit of the law was intended that employers would keep people on the payroll for 8 weeks because they were hoping that within 2 months, people would be back at work. We'd be able to reopen businesses. We will have flattened the curve enough to give hospitals time to deal with the surge, to give some kind of treatments available, all of which we've done, right? We haven't seen a single hospital, maybe it's outside of New York City, that has reached peak capacity. Right. So we've done that. We're starting to reopen, right? There's at least one treatment that reduces the severity of it. They're looking at others, right? So we did what we were supposed to do. This PPP was intended to pay people through businesses for 8 weeks.
Okay. That also, light bulbs are going off, and this discussion seems very helpful, at least not only to me, but I'm sure to a number of the clients that I've been speaking with. The other area that seemed to be of some, I would say, gray area, and maybe I'm making it gray because I just can't believe it. But when you're looking at the PPP loan, it says that the owners can take up to $100,000 if that of their payroll, if you will, and that wasn't just W-2 from what I read. It was including up to their draws and what have you. Is that the case? If let's say that I had to let somebody go, I did hire somebody, so my head count really hasn't changed, but that new person is of less cost to me, and now I'm not necessarily reaching that 75%, but I haven't maxed out on myself as the owner. In order to get it forgiven, should I max it out on myself and then just put it back in the business, or what would you suggest?
I don't know how that's going to work. We have not, the SBA, I mean, you got to think of the speed that this massive government program was rolled out, right? I mean, they passed the legislation and then bam, like less than a week later, people are making loans. It was insane.
Yes, I've never seen anything like this.
Yeah. So because of that, right, the banks still don't know what the hell's going on. The SBA has not provided guidelines yet on how we're going to get this forgiven. We know what the rules are, but we don't know what that documentation is going to ensue. We don't know if it's something that we do to the bank. Is it something that the bank does to the SBA? Like, there are no rules on this written yet. The guidance has not been provided yet.
Yeah, that's an area where I think that they're ensuring that the legal industry doesn't go under.
Yeah.
Certainly there'll be some discussions on this, I'm sure, in courtrooms around the world or around the country.
Probably worth, if you have a good relationship with your business banker, I would talk to him or her. I mean, I'm fortunate that I have not only mine, who we have a great relationship, we're good friends, but I also have other business bankers that I work with that I'm friends with. I would reach out to one of them or your business banker and say, hey, here's where I'm at. What do you think? But if you don't have that relationship, to be ultra safe, what you could do is just bonus your other employees.
Ooh, good idea. Great idea.
Because that, again, in keeping with the spirit of the law.
Right. Okay.
Right.
And if you bonus everybody, including yourself, then that doesn't necessarily look like you're just trying to satisfy the 75%.
Right.
Okay, that's a great answer. I like that one.
And honestly, given the size of this program and the fact that, right, and now they're going to have to, they don't have the staff to administer all this, right? And what staff they have is working from home or not working, or, right? So I think what they're going to do, my personal belief is they're just going to say to the banks, you need to have payroll reports, you need to have utility bills, you need to have interest statements or rent or leases. You have those on file. The bank looks at it, runs the number, says yes, check, move, forgiven, and move on.
Okay.
I
Let's
personally think that's what's
your
going to
personal opinion becomes fact.
Yeah, I don't see how the SBA does not have the resources, and that's why the SBA doesn't lend directly, right? They lend through their banks, right? They lend through banks, and the banks do the underwriting, and then the banks say, yes, it meets criteria, and the SBA says, great, if they default, we're on the hook for part of it.
Okay.
In the case with the PPP, they said if the person defaults, we're on the hook for the whole thing. So the banks had no risk. But what they'll do is let the banks then sign off on forgiveness, just like the banks signed off on the underwriting for this. And then they'll audit a certain number, or they'll look for defaults. And those are the people that they'll actually look at the data for.
Okay. All right. Well, that makes perfect sense, I would say. Perfect sense.
And again, my opinion, not facts necessarily.
Right. I think there's going to be a lot of opinions for a long time on this as they actually drill down through this. I know that we've had a lot of discussions, and maybe this is something you might have some information on. I'm not sure if this is in your wheelhouse or not with the FSAs, dependent care accounts. That has been a question this week that I have been tracking down, trying to get to the bottom of, in hopes that there was just something mentioned somewhere about how we handle members. For instance, in this one group, I've got a gentleman who's got about $566 left in his dependent care account, and his plan year is about to run out. They have a flexible spending account with the medical piece, which will roll over that $500, but in the dependent care account, he can't spend that money because he doesn't have daycare. So he's about to lose that money. Some references from previous, I talked to Smith and Downey about it. I've talked to a tax person about it. I've gotten some conflicting statements as to what we can do with that, what they call an expense gain from the employer retaining that $566. Have you worked with any dependent care accounts and had any issues or had this come up in your own office yet?
I haven't had it come up yet. I would wonder, could he prepay for daycare?
Yeah, that's where I went with it too, but it looks like it has to be like the daycare, well, I guess the daycare would have to invoice them for it. I don't know how that would work. That was one of my thoughts as well, but I think there was a prevention in that. I'll have to look back at my notes with Smith and Downey. It was more that they had to pay for the services rendered in that time period, and he didn't have services.
Now, did they allow, because I know typically you can carry forward 3 months after your plan time.
Yeah, they have a 90-day run out on this plan.
And so is the 90-day run out coming up, or is the plan year coming up?
The plan year is coming up. So they'll still have, I guess, the 90 days to spend that money. But how does that affect I wonder how that plays out on the end there with the tax situation for what they've put away if they don't have that expense and they don't get the money out of there through a valid receipt of services.
I'm willing to bet that within 90 days, that people are going to be back at work and daycare is going to be open. Can you imagine this country if we go another 3 months?
No, because I'm still looking for all of the essentials, if you will, because I was too busy slinging paperwork and webinars around here to go to the grocery store.
Yeah, no, there is no way we could go another 3 months without reopening.
Okay, so we just got to play the 90-day run out and get it out through that 90 days.
That would be my suggestion.
Okay. All right, well, this was very helpful and informative, and I hope that it's the same for everyone that tunes in and listens.
Yeah, well, thank you for including me. I really appreciate it.
Yeah, you're welcome.